GameStop is already halted. Now, this is a perfect time to dive into what are halts. So what a halt is, and you'll see, our halt scanners and picking up stocks that get halted. It is going to be when essentially the stock is turned off. No one can buy it. No one can sell it. And the reason why these stocks get halted is because of volatility. These plays can be halted because of volatility. These plays can be halted because of pending news, or these plays can be halted because they are being investigated. So when I take a look over on GameStop right now at this moment, and we could see it says LULD, LULD. I want you guys to listen up to this. This is very important for every single trader to understand. We have all these different prices here. So what we have here is we could see, I'm going to grab and take a screenshot on the level 2 on Lightspeed. And not every broker has this, but this is one of the reasons why I really do like Lightspeed here, is you will see the LULD. The LULD will tell us where the whole price is. So if I see $0 and 9,999 million, obviously, or AMC actually just got halted. That's why. So AMC just got halted. Let's go to a different play. Let's go over to just a random play. Let's go to CTNT right now. CTNT, which is currently, again, a great #1 top gainer, currently up 245%. So CTNT, let's take a screenshot of this and we will see where the halt area is going to be at. So where's the halt area? LULD stands for a limit up, limit down. So if you hit the price of $4.50, CTNT is turning off. If you hit the price of $3, CTNT is turning off. So right now, what would that mean? CTNT would have to go on a nice spike. Notice it came up to $4.30, then it started falling back on down. The LULD at $3, if it falls another 60 cents, it gets turned off. So the point of a halt, for anyone who does not understand, it is supposed to be a time that allows traders to take a breath. Now I'm going to give you a little backstory right here. Halts were put in after the 2008 crash because they understand how much momentum takes over in stock trade. So for instance, let me draw this on out for you guys. When we're speaking of halts and how halts really work, let's imagine that the S&P 500, the top 500 companies in the United States, which is basically the stock market, okay? That's how people think of the stock market, by looking at the S&P 500. What happens if all of a sudden the S&P 500 starts falling and falling and falling? People start to panic. They start to say, uh-oh, this isn't looking good. Uh-oh, this is, again, really scary. I want to get out of my play. Then this guy, he gets out of his play. He sells. Now, when you sell, it makes the stock go a little bit lower, right? When you buy a play, it goes a little higher. When you sell a play, it goes a little bit lower. So now, again, he made the stock sell. Now we have 10 more people saying, uh-oh, I got to get out of my play. I want to sell. I got to get out. Now, again, it's making it go lower. Now more people are getting out of the play and they're panicking and they're saying, oh, it's got to go lower. This is what happened in 2008. In 2008, we started seeing people panic and people run to banks. People take out their money. People, again, take the money out of the stock market, and it made the stock market drop and drop and drop and panic and panic and panic until it kept falling and falling and falling and falling. So after 2008, they started putting in what we call halts. And halts are going to be when we start panicking. It stops it for 5 minutes. 5 minutes. Sometimes it goes to 10 minutes. Sometimes it goes to 15 minutes. But in most cases, it will always be 5 minutes. And this allows traders to get a little breathe. This allows traders to say, okay, you know what? Maybe instead of selling, I'm going to get a dip buy right here. And it allows traders to maybe look for a reversal to not allow the play to dump so hard. So you will see plays that are the hottest ones. You will see plays that are the most volatile. You will see plays that have the most action get halted. So a lot of the penny stock plays we get involved in that are super hot will usually spike, get halted, have a big gap up. Spike, get halted, get a big gap up, and then come crashing on down the same exact way. When a stock gets halted, it shows that there's too much volatility on that play, and it's the market makers freezing the play, trying to allow more buyers and sellers to come in, and they're matching up the orders. So what we have here is if there are more sellers than buyers, guess what? They have to match up the orders, and that's usually why we have some sort of drop on down. Now, let's take a look at this team. We have GME, which is currently halted at this moment, which means no one can trade it. AMC, which is currently halted at this moment, which means no one can trade it. You can go to a website, www.nasdaqtrader.com/trading halts, and you will see exactly when and why the stock was halted. GameStop is now live. Let's see how much lower this is going to go down towards. Right now, GameStop is now live. It actually might get halted again here pretty soon, team. The LULD says 0 and 9,999. Usually that means it's going to get halted if it's not hitting like the exact price, because 0 and 9,999 are kind of just, like bottom prices. It would never hit that. So a lot of times when it shows that, that's usually our halt price. LULD $57, limit up, limit down. And we might get halted again. We just got halted again. So what we can do right here is we can see that GameStop at this moment is getting very weak. GameStop is definitely turning. Here is the list on the NASDAQ, shows current trading halts. And at this time, if I refresh this here, there's GameStop, GME, GameStop. Reason for the halt is going to be volatility. So you can see right here, reason for halt, volatility. KOSS, volatility. So you can see the majority of halts are going to be on volatility. Now, every single halt also also last 5 minutes. So the majority of trades are going to open up 5 minutes after their first hold. So you could see a lot of times, guys, this one, 8:55, then open up at 9 o'clock. This one was 9:30 and 91 seconds. This one opened up at 9:35 and 91 seconds. Here's again GameStop just from before. GameStop opened up 5 minutes exactly after. AMC is going to open up 5 minutes exactly after. So a lot of times you come to this website so you know what time it's going to open. So if I see that KOSS got halted at the time of 9:35 and 16 seconds, it means it's going to open up at the price of 9:40 and 16. So AMC is live right now. Let's take a look over on AMC. Now AMC traders, we can see where's the hold price. It says 009,999,999. Usually that means it's about to get halted whenever we see that. So just make sure that you guys are aware of that. But it always comes down to, it usually shows the exact price. It'll show the exact price in most cases on when the exact halt area is. So always be watching that. These plays, unfortunately, are just like so fast, so wild, so crazy that these plays are kind of tough to know exactly when they are going to hold. But in the majority of plays, such as like CTNT, you just type it in. CTNT, where's the halt price? 317. Where's the halt price to the upside? 475. Wherever it says LULD, limit up, limit down, is the price of where it's going to get halted. Now, it's almost like a goal for traders. A lot of times buyers try to get to that halt price. Now, why do buyers want to get to that halt price, or why do sellers want to get to that, area? Because I know a lot of times the halt price basically is supposed to allow traders to take a breath and relax. But a lot of times when you hit the halt price, it shows encouragement. It's like, hey guys, CTNT, we hit the halt price. Guys, we know buyers are moving so great. So here, look at this. CTNT starting to spike. We might hit the halt price right here. LULD's at 480. Can we get up to 480 and hit the halt price and get halted? We're at 480 right now. Come on, can we get halted? Nope, we're not there yet. We're getting a couple little sell orders. Now LULD still at 480. Oh, so we did not get up to that price. We almost were at it. We were almost at that area to be able to spike on up. But you can see it's almost like buyers want to hit the halt price. And the reason why is because when you hit the halt price, usually it shows that's the clear-cut side of momentum. Not only does the stock sometimes gap up in that way, but it also can continue in that way. It's almost the same exact thing with GameStop. GameStop right here, GameStop dropped on down. And you could see when it opened on up, it had a small gap down and continued to drop on down even a little bit lower. So that does make it a little bit scary. That does make it a little bit, odd. That does make it a little bit tough for buyers to say, oh man, can I actually jump in on this play? It obviously looks like things are falling. It looks like things are getting weaker. It looks like things are getting a little ugly for us. Now, what I will say, coming on up here over on GameStop, is we need to be aware of support. Support's right around $55. Guys, take a look. We bounced off 55. We bounced off 55. We bounced off 55. We bounced off 55. $55 is going to be a very nice support line for us over on GameStop. So where's the best area for shorts right now? You guys can really figure out this answer. Best area for shorts is going to be right at this red line. Anywhere near this red line is an acceptable area for shorts. Anywhere near this bottom blue line is going to be an acceptable area for dip buys. That does not mean you will win every single time. This does not mean that you are going to say, all right, hey, I'm going to win every single time I buy at support and short at resistance. That's not, 100% true, but it does give us an idea. So we do have GameStop, which is currently halted. So Deck, when is this one going to be coming on out? We can just go back to that website, NASDAQtrader.com/trader-halts. It actually is live right now. So you can see this, guys. Look at GameStop right now. Actually dropped underneath support. It actually gapped underneath support right now at this moment. And GameStop is definitely looking pretty weak. Momentum towards the downside. A lot of weakness at this moment. Fading and falling and dropping. And now, guys, we're still getting lower. Take a look at GameStop at this moment. People are starting to dump this thing on off. It is getting weak at this time, and we are still fading and falling. So if I wanted to get involved in GameStop, what would be the best way for me to do this? Well, I would again click locate over on Lightspeed. Locate over on Lightspeed. It costs $7 for me to short this play if I want to. So is it worth it? Can I make more than $7 out of this trade? Absolutely, guys. Absolutely. So all I would have to do is click again the accept button. Click accept. Guess what? Order successful. Now I can short 1,000 shares of GameStop whenever I would like. So I can short 1,000 shares of GameStop whenever I would like now throughout this entire day. So if I use them, I had to pay $7. If I don't use them, I still had to pay $7. No matter what, I am paying $7. That is how the broker makes money. When you have to locate shares to short, you have to pay the broker a certain amount of money for you to go ahead and now be able to short those plays. $7 isn't bad whatsoever. So GameStop right here, team, as you guys can see, we have now dropped from $71 all the way down to $50. Now, something that I do want to talk about with halts here. Here's a little fun fact. The longer the halt, the more fear that's going to build up. So if GameStop gets halted, not only for right now, right? Let's say GameStop gets halted at this moment and it gets halted for not only 5 minutes, but it gets halted for 10 minutes. And now it's 9:52, 10 minutes from now. And people are saying, Deck, why is it not unhalted? Why are we still halted right now? People start getting more fearful. Remember in the stock market, it's almost like one big game of psychology. The more fear there is, the more selling there's going to be. When there's more selling, it leads to the stock market dropping or that stock drop. When there is more buying and more confidence, confidence, that is where the stock goes higher and higher and higher. So let me ask you guys a question here. If GameStop right now has been falling for the last $20 and we have longer than a 5-minute hold, we have a 10-minute hold, a 15-minute hold, it's most likely going to lead towards more selling when this one comes on out, because people that are holding this play are going to start getting nervous. People that are start holding this play are going to start saying to themselves, I don't know if this is a good idea anymore. I'm going to get out of this play. Same exact thing happens on the opposite side. If the stock is spiking, and we have 5-minute hold, spike up higher, 5-minute hold, spike up higher, 5-minute hold, spike up higher, but then we have a 10-minute hold, a 15-minute hold, 20-minute hold. People start saying, why are we holding for so long? Is something going bad? What's happening here? They usually take profits. The longer the hold, usually the more profits that are going to be taken, because people's ultimate fear is going to be this right here, a T12 hold. Now, if you guys do not know, a T12 hold is a very scary thing. A T12 hold is when the SEC steps in and they stop the stock from trading and they say, we are putting an investigation on this play. We are putting an investigation over on this play. We are going to be figuring out what's happening here. Now, how long does an investigation last? Could last months, could last years. And all your money is stuck in that play that entire time. So you will not be able to trade any of those funds. If your whole entire account's in that, that's what happens. And 99.9% of the time, since the SEC is moving into it, all investors move out of that play. So when it does open up 6 months down the road, it usually opens all the way back up towards like $1. Like it usually gives back all of its gains and back to nothing. So the thing is, holds are normal. Holds are a normal thing. Volatility holds are normal. There's nothing wrong with that. But every now and then, maybe I'm going to say 4 or 5 times a year, you'll see a massive breakout and then you'll see a play get halted for a T12 hold. Like for instance, this play has been halted since 2022. This play's been halted since 2022. They're doing an investigation. And anyone who has money on this play is just sitting here like this, waiting for their money to come out. Now, the thing is, if you are short on a T12 hold, yes, your money is going to be stuck in on that play. But guess what? When that money comes out, you are going to be up in so much money. The worst thing that you could be is on the long side on a T12 hold, because that means you got money stuck and you know most likely all that money is going to be gone. So that is the issue with those type of plays. Now, I don't think GameStop is in a T12 hold at this moment by any sort of means, but I do want you guys to be aware of what T12 holds are. They're scary, right? They're nerve-wracking. But guys, you can see GameStop is live. We are back within the 5 minutes, and we do just have a lot of this negative momentum at this moment. Now, traders, some of you guys may be asking me a question right now, or maybe thinking it, saying, Deck, GameStop has fallen from $70 down to $45. Why won't you short right now? Now, traders, that is a great question. That is a great question right here. Why would you not just short right now? And the answer is why I would not short at this moment is because it's almost like the same exact thing as if I see a stock spiking, and then I buy it right here, saying, let's go up higher. Come on, GameStop. Go up higher. Yeah, come on, go up higher. And then guess what happens? Now it comes crashing on down. And people say, Deck, go ahead and jump in on a short. Come on, jump in on a short. $45 is going to be a great short. And then guess what happens? Now it starts going back on up. A lot of times, you are going to make the mistake of trusting your sight too much. Not trusting your faith. Not trusting what's the right way to play these plays. So again, when I take a look over on a lot of plays, especially GameStop, people see a big spike, and then guess what they do? They end up buying at the tippity top just to lose. Then people say, oh, it's dumping. Let me jump in on the short. They jump in on the short just to realize right now, guess what happened? It now has a green candle. So we do not want to be the guy that is constantly on the wrong side. Has anyone ever said to themselves before, it seems like no matter what I do, no matter what I get involved in, no matter what I trade, no matter what happens, the stock always does opposite of me. I'll tell you why that happens right now. You see GameStop go from $45 all the way up to $75, and you're buying at $75. The stock just went from $40 to $75, and now you are buying after a $35 spike. Why? Well, Deck, I thought maybe it was go up higher, and then that guy on the internet told me that if I sold it, I was an idiot. And then this guy over here, he told me that GameStop was gonna go up to $1 million. And that guy, I don't trust that guy no more. I don't like that guy no more, right? So the thing is, I see that happen way too often, where people basically see a spike and now they say, ooh, it's a good play. When really in stock trading, it's a game of opposites. In stock trading, it's you see a spike, it's time to short it. You see a dump, it's time to buy it, right? That's how stock trading works. But most traders, I can't wrap their head around that. Ooh, big time spike means I buy at the tippity top. No, big time spike means get ready for a pullback. Oh, a nice big pullback just happened. Watch your GameStop to start moving its way back on up a little bit higher, right? So that's what you guys need to be able to understand. That's what you guys need to be able to get out of these plays. I don't want to short the play after it just fell $40 or $30. For those that shorted it, just crushed it. it. But the thing is, we don't want to be the person that's super late and now saying, oh, I shorted it at the exact bottom, right? So it's awesome to be able to see these plays. I just sent every single person here my scanner settings, okay? Let's talk about how to use them, all right? So all you guys are going to do is you guys are going to click those links. When you click those links, you are going to have trade ideas load from cloud, okay? So remember, you do need trade idea software to load these to your cloud. But all of these scanners that I just gave away for free are going to be perfect for shorting, finding the best shorts, everything you need. I'm going to explain why. And all you guys have to do at this time is copy this link right here, copy this link and add it into the load button. So it gives you clear-cut directions. So what I'm going to do is I grab this, right? Here's this. I click file, load from cloud, and then I drop it right here, boink, and now I load it. Click load, and here's my pre-market scanners right here, right? Same exact thing with the other one. Let's say my live trading scanners. So the live trading scanners that you guys are seeing right here, I'm going to do the same exact thing. I'm going to grab this link, copy this link, have my trade ideas open, bring over the menu bar from trade ideas, go file, load, and then again, paste it, click load, boink, and now you guys have my entire trade idea set up. So what I'm going to do at this moment is I want to go through pre-market, I want to go through my live trading scanners, and I want to go through after hours to make sure you guys understand absolutely everything that you guys are looking at, okay? So let's start with pre-market scanners here. So what I have here is our pre-market scanners. Let's bring these on up. Pre-market scanners at this time. What is the point of them? What do we like about them? What do we know about them? Our pre-market scanners, when you guys have this link, you are going to get a setup that looks like this. Now, just a little heads on up, GME is from Lightspeed. So you guys are going to have this setup on your screen. You're going to have pre-market movers, you're going to have the down gappers and the up gappers and two charts. Now, the thing is, I always like to have two charts. The reason why I like to have two charts is I like to have a full understanding of where the play has been the past 6 months. And I like to also have an intraday chart so I can see what the play is doing in this exact moment. I remember charting used to really confuse me when I first started. When I first started, I was so confused on thinking, how is meta this pattern while also meta is this pattern over here? And really the way it breaks on down is each candlestick on the daily chart, if we zoomed into it, is over here. So the thing is, if I'm in a 1 minute chart and I could see that this orange line, basically orange is pre-market before the day opens, and the white on the opposite side, this is the live trading. This all right here, which is right above me, is what's happening inside this small candle. So for anyone who doesn't understand, you're saying, how are these charts the same? This is a daily chart. Every candle is represented as one day. This right here is the 1 minute chart. So what is happening inside this candle is right here. So I always like to see what is happening inside the day. What is happening on not only the last 6 months, but what's happening on this intraday since I'm a day trader. So I always have two charts up. I always have a daily chart up, and I always have either a 1 or 2 minute time frame chart up, so I could see as a day trader which way are these plays going. Now on top of that, I also have up gappers, down gappers, and pre-market movers. Now why do I have these? Traders, when you wake up in the morning every single day, you want to see what stock is up the highest. So if I wake up and I see CTNT is up 160%, guess what? Boom, that's going to be a play that I'm probably going to be interested in. All I care about is volatility as a shorter. I want to see what is the stock that is the highest one up that has the most room to come crashing all the way back on down. So the stocks that are up high, the stock that is up 160% on the day, the stock that is up so much has the most room to fall on down. So really, when I wake up every single day and people ask me, hey Deck, what are the best plays? I can look at some of the top gainers, CTNT, AMC, GME. I know that these are up big and I'm able to make money right away off them because I know usually the top gainers are going to be the ones that have the most weakness. You might say, Deck, how does that make sense? The ones that are the top gainers at the start of the day, people take profits. Imagine if you were holding GME last night. Let's just imagine that. Imagine if you were holding GameStop last night from the price of $29 and you woke up this morning, it was at $65. You are most likely taking profits, which is what leads to drops. Same exact thing with AMC. Same exact thing with CTNT. You know, you get these big spikes, you get these drops and fades all the way back on down, right? SPWR, you went to sleep last night at $2. You woke up this morning, it was at $7. Everyone takes their profits and sells them on off. So top gainers are usually the best play for best shorts. When a lot of people think, oh, Deck, you know, aren't the top losers the worst shorts? And in reality, no. Usually the top losers are going to be the ones that actually get good dip buys. So as I said before, a lot of times stock trading is almost a game of opposites. When I see top gainers, I get ready for shorts. When I look at top losers, I look at them to see if there's any potential bounce play. But yes, top gainers can continue to spike. And yes, top gainers usually again do turn into best shorts. I don't look at the top losers as often. I'll be honest with you. I don't, because top gainers are the ones that have more volume. Things that can go up higher or things that can turn and dump even lower. Usually again, plays that are top losers don't have as much volume behind it. Now, the big things that I care about when I take a look at the up gaps is I look at the price because I want to see if I can afford it and how many shares I can buy on this play. I look at the gap dollar percentage. How high is this gapping on up? Like how many dollars? Because I kind of have in my mind, if a stock is moving $5, $6, $7, $10, $20, I can make a lot of money. If GME moved up $33 on the day, it could fall $33 on the day, and I could be able to make a lot of cash. You know what I mean? So I always think about that. Then you can always correlate it to, again, the percentage that the stock is moving. And we always do like to look at the float, which we will learn a little bit more in the future. Okay. So usually the best thing about this is I look at my up gappers and I look at the charts. I also like to look at the pre-market movers, because the pre-market movers, if I see something that is moving very quickly, guess what? Volatility equals activity. Activity equals profit. I a lot of times don't care if a stock goes up or if a stock goes down, but stocks that are moving are the stocks that I want to be trading. So the thing is, let's think about it. If I see a stock do this, if I see a stock just move sideways, is there any money for me to be able to make here? No, there's no money for me. But if I see a stock doing this, monster spike, monster dump, monster spike, monster dump, there's money to be made. I could be making money on the upside. I could be making money on the downside. So I like looking at our top gainers right here, our pre-market movers, to see where this hype and momentum is going to be getting after. And then also I always bring over a level 2 from Lightspeed. And that basically puts together my scanner package, where we do have our level 2 right here from Lightspeed. We have our Fox Runner new scanner right here. And then on top of that, guys, we also do have our charting from Trade Ideas. Now, after I have my ideas of what I want to be looking at, I do bring over my main charts of the day. So my main charts of the day, the ones that I just posted right here. And here's our scanners that I use every single day. This is what I always like to focus on. And remember, guys, I just gave you this. You guys will be all set, ready to rock. Now, what do we like to look at? Same exact thing as we talked about before. I like to keep my eyes peeled over on a 2-minute chart and a daily chart. You can bounce around with a minute chart. You could be in a 1-minute chart. You could be in a 2-minute chart. As time goes by, you like to step back a little bit, but then I always like to have a daily chart open so I can see what has happened in the past. That is always so important to me. Now, let's get over to the good stuff here. The breakout scan. What is the point of the breakout scanner? Ladies and gentlemen, I name these scanners so that you guys can figure out exactly what they mean. A breakout scanner is usually a stock that has a lot of momentum. A breakout scanner is usually a stock that is starting to, you guys guessed it, break out slightly. The more times you see a stock break out, the more times you see it come on up, the better chance of a breakout. So right now we can watch the breakout scanner and we can watch the high of the day momentum scan. These are the two scanners that help me find plays right away. So I'm seeing ANY. ANY popping on up many times. Let me click it. ANY, guys, is starting to spike. This is now giving me an idea that ANY could possibly become either number 1, a breakout, or number 2, could become an upcoming short. So the secret sauce here, team, that a lot of you guys are going to want to learn is watch tomorrow. You want to be watching the count alerts, okay? So watch the count alerts. Notice that like RNAZ has 78 counts right here. That means it's had 78 high of the days. So tomorrow, when you guys are using this high of the day momentum scan, what I want you guys to realize and what I want you guys to look at is look at what plays are coming up, of course. Look at their low floats. Lower floats always have better chance of spiking, but watch to see what is the first play, the second play to hit a high count. And what's a high count? Like a 20 count. What's the first, second, third play to hit over a 20 count? That's where the mob is usually going. That is where the action is usually going. So we can see right here, RNZ has a 79 count, 80 count. That's usually where most traders are looking at. So RNAZ has gone from 50 cents all the way up to 75 cents. RNAZ is a top dog here today. People like RNAZ and it keep coming on up on the high of the day momentum scan. So if I see a stock that is consistently coming up on the high of the day momentum scanner, such as RNAZ, I'm saying to myself, wow, that's a play that a lot of buyers are looking at right now, which could be a great potential short in the near future. So the high of the day momentum scanner not only shows me what stocks are spiking, but it gives me ideas of what's coming up next. There's nothing really popping up on the breakout scanner right now, but usually it goes from when a high of the day momentum scanner really gets a lot of action, you'll start seeing the breakout scanner start getting a lot of action. The penny stock top gainers and top losers is the same exact thing as we had over on pre-market. It just tells us what is top dogs right here. So I can see CTNT is up 244%. HOLO is up 56%. Obviously, I know that this play 243% gain is a much better play. It's much hotter. It's much more active. You know, and you guys can adjust this. Go over, you guys can right click and click configure. And once you click configure, you can change anything that you guys want. But what you can do here is change the price. So right here, I have between 25 cents and $25. Let's just go to at least, let's go $2,500. We'll get every play available in the stock market. So what we have here, we do have AMC now popping on up. AMC popping on up, GME popping on up. You can see they're right here now. So if you guys see a play that maybe you're saying, why is this not on the top gainer board? You may just have to adjust the settings here and there because those are set for more 25 cents to $25. More of these normal penny stock actions. AMC and GameStop is a little bit different. They're massive plays. So you may have to adjust it slightly here and there just by, again, allowing the price to be higher. That's all. On top of that, we also have our Holt scanner, shows us what stocks are going to be halted. And then last but not least, we do have our mid-candle breakout scanner. Mid-candle breakouts, guys, are one of my favorite breakout patterns. They only happen on the daily chart. So So a lot of these plays, when you see the mid candle breakout pattern, they're going to be plays that are spiking on the daily chart. And I actually love looking for breakouts on these plays. If that's NVAX, CCLD, that's a good one. KOSS, that's been moving on up. INOD starting to move on up. So it's a pattern that I love and I will teach you as we move forward. Now remember, it's not only just our scanners. I do bring over, of course, our Lightspeed level 2 here. Lightspeed level 2 right here. And that's basically completes my setup. So what completes my entire setup right here is going to be my trade idea setups, my Lightspeed setups, and in the morning, of course, my Fox Runner setups, which shows me all the hottest news, which is, extremely important in stock trading, okay? Which is super important in stock trading so that we are all set ready to rock. Now, let's keep on going here, team, and let's go over to after hours. And after hours is the same exact thing as you guys can imagine. Most up and down in post-market, stocks that are moving in post-market, and again, a momentum mover for post-market. So the thing is, traders, we are just looking for stocks that are constantly hitting highs. Stocks that hit highs are stocks that traders are looking at. Stocks that are hitting highs are stocks that traders are pushing on up. Stocks that are pushing on up are stocks that have volatility, which means we can see breakouts, we can see shorts, we can have all that good stuff. So that's the things I want you guys to be aware of, that it's all about looking for plays that are hitting highs. Hitting highs shows that that stock has volume. And as long as it has volume, we can make a lot of money off these plays. Now, let's go over to my Lightspeed broker and let's talk about my Lightspeed broker and let's talk about what we have. Now, I do have my account number here, so I don't want to show that. Please understand that, but I'm going to bring everything else over what I have over on my Lightspeed. So on my other screen, this is my setup. I have my orders right here. I have my positions right here. I have my short request button right here. I can make this a little bit smaller so it kind of blends into the screen. I used to have a option chain, right? But other than that, I'm not doing options right now. So again, I do just have an order entry box right here. Let me bring this on down. There we go. I do have a message box basically telling me you're in, you're out. But again, that shows my account number and stuff. And then I do just have a chart right here. So this is my Lightspeed Trader brooch. So if I want to do this, if you guys want to have the same exact setup that I have, number one, to get the short request button, everyone listen up very carefully. If you want to short on Lightspeed, which is probably what 99% of you guys want to do, is you have to email shorts@lightspeed.com. So go to gmail.com right now, go to Microsoft, whatever you guys use, and go to shorts@lightspeed.com, add your account number and say, can you please add the short request button to my platform? And then once you do that, you will be able to go over to the new section over on the header and you guys will be all set ready to rock and roll. So you guys can see right here and we can go new. So once we click new right here, you guys can see I can bring up a level 2, right? Type in GameStop if I want to. You guys will be all set. You guys can go over to watch lists, right? You can create watch lists, add, different watch lists, things along those lines. You can go over to add a time in sales, right? You want to add GameStop. You can add everything right here. You can add over towards, a chart, alerts, fundamentals, right? Option level 2, all this stuff. But then all the way down here, right? Let me move this over slightly. You go new, and then over here is the short request button. So when you click short request, now you can go ahead and start shorting these plays. So GameStop, 100 shares. I want to short it. Boom, cost me 75 cents. I click accept, and then I'll be all set ready to short. So you do have new right here. You have utilities, you have layout, you have windows, all this different stuff right here so that you guys can be able to, make the best setup possible. For me, I again use a lot of trade ideas to be able to find the best plays and things along those lines. So guess what, team? I really only use orders. I only use positions. I only use the short request. I only use my order box, and I only use the level 2. I'm not using a ton of crazy things because I use a lot of my Fox Runner news scanner for news, and I use my trade ideas for actual charting. So when I'm looking at my Fox Runner, when I'm looking at my trade ideas, when I'm looking at the level 2 and I'm ready to enter a play, this is how you guys are going to want to do it. You guys are going to locate your shares, right? You locate your shares, you click accept, right? I already located 1,000 shares. Now, what you're going to do is go to your order box. Now, your order box, you are going to type in whatever stock you want to do. So we can do GME. You are going to put how many shares you want to do. So let's say 250, 500, whatever. Then in most cases, we are going to want to be using a limit order. Why do we want to do a limit order? A limit order is going to allow us to pick the price that we want to get filled on. So over on GameStop, let's say I'm taking a look over on GameStop. Let's bring it over a chart on GameStop here. And here's a chart. And I know that GameStop has a resistance here, and it's going to be resistance up here, right? Would that make sense? Would that make sense of me saying, okay, I'm going to do a short here at $70, short here at $72, a short right here would be at $66. This would be following the downtrend. That's a great area. So if you want to place an order up high, you can do that. You can say GME, I want to get filled at the price of $67. $67. Now, I always use ARCA LS. Now, why do I use ARCA LS? Because ARCA LS is actually going to be one of the best routes for you, market routes. Now, there might be like a 20-cent charge when you use ARCA LS because it's a little bit quicker and a little bit better. Now, the thing is, you will also have to use use ARCA LS if you are trading in after hours or if you're trading in pre-market. You must be using ARCA LS for after hours and pre-market. But sometimes, again, traders might just be using Lightspeed. Lightspeed has their own route, that's fine, and that's what kind of the standard is. So either use Lightspeed or use ARCA LS. It's fine, both will work, but ARCA LS is going to allow you to trade after hours and pre-market. This is all the way from 4 in the morning all the way until 8 o'clock at night. Then, since you have limit order, you'll be all set. Now, another thing you can do, guys, is you can actually not show your shares on the level 2. If you're saying, hey, I have a big order coming through, I don't want this to manipulate the market in any sort of way, you can actually hide your shares if you want to, and they won't show up on the level 2. This will also be a small additional fee, and to me, it doesn't really matter. If you're getting 250 shares on a play that's getting millions of dollars, it does not really matter in any sort of way, okay? TIF stands for day. How long do you want this order to actually be pending? So if my order does not get filled at $67 by the end of today, by 8 o'clock tonight, it is going to get out, right? It's not going to get filled. It's going to cancel itself. Then we have market day. Market day would mean that this order is going to close at 4 o'clock. Then we have good till canceled, which means they'll open up forever. This order will be open up for days and years until you close it. 1 hour, 4 minutes, 3 minutes, 1 minute, 30 seconds, right? These are all things that you guys can pick. Pick whatever you want, right? Unless you're really being strategic about it. I always do day. Obviously, if you do 30 seconds and you don't get filled within 30 seconds, well, then it's going to cancel automatically. I always have mine just set on day. Other than that, remember, traders, this is the complete opposite. This is the complete opposite of trading. So what do I mean by trading here? You are going to click sell to get involved into a play. So if I do a limit order right now and I click sell, boink, right? Oh, it's not letting me because it's so far away. Let's just go up to like $59 right now. We're not going to get filled on this either. So let's go right here. $59. GameStop. It just came up in my order box, not my position box, right? So GameStop 0250. There are 0 shares filled out of the 250 shares that I want to get filled. I will get filled at the price of $59. And this order was set at the time of 10:26. My positions is going to be what is actually filled. So there is nothing that is actually filled at this moment, as you guys can tell. So I have a pending order, and if I don't like this order, I can cancel it. So do I use the charts? Yes. Do I use the level 2? Yes. And do I use the short request button? Absolutely yes. So I want to make sure that you guys are all set, ready to get after it. You guys are all set, ready to make this money. Shorting. Today's the basics of shorting. Understanding how it works, why we do it, what we're looking for on these plays. Actually, understanding how do we get paid from shorts. So what is shorting? Short selling allows investors to profit from stocks or other securities when they go down in value. In order to sell short, an investor has to borrow the stock or security through a brokerage company from someone who owns it. The investor sells the stock, retaining the cash proceeds. The short seller hopes that the price will fall over time, providing an opportunity to buy back the stock at a lower price. Any money left over after buying back the stock is a profit to the short seller. Traders, I remember when I first started learning about short selling, I was so dang confused on what the definition was. It was like, how do we make money? How are we buying the shares, not now, but we're covering the shares and then buying it back to our broker? This is really all that you need to know. First things first is you make money as the stock falls. Very simple, very easy. But let's just think about it in this manner. If I buy a stock, right? I buy shares and the stock goes on up and I sell shares here. I make money from the difference. I make money if the stock goes from $1 and goes all the way up to $2 and I put in 1,000 shares. I bought at the price of $1 and I sold at the price of $2 with 1,000 shares. That gives me a $1,000 profit. Now, all we're doing is the same exact thing, only opposite. In this case, we are going to click the sell button first. When we click the sell button first, that is now giving us the shorts on this play. And if it falls down to $1, when I click buy, it is now getting me out of this play. Now, when this transaction goes to your broker, guys, okay, this is how it works. When your transaction goes to your broker, it will just flip it and basically say, okay, if you bought from $1 and went to $2, you got $1,000. But since you sold it at $2, then bought it at $1, that's going to still be $1,000. And yes, you sold it here and bought it here, but we'll just flip it around and say you bought it here and sold it here because it's still the same exact thing. So what we're doing here is we're buying second. We're shorting first. We're basically picking what's the exit price. What's the exit price first and then getting in at a lower area. So sometimes trying to figure out what's the definition of shorting is way more difficult of what actual shorting is. All shorting is we are betting the stock's gonna fall. And other than that, you don't need to do anything else with your broker. You click sell, you click buy. Even some brokers have the word short and cover. If you have your broker and it says short and cover, that's what you want to be clicking. Short first, cover second. So really how this works is short sellers borrow a stock from the broker, just like we paid $7 from Lightspeed on GameStop. Short seller immediately sells the stock on the market. Short seller buys back from the stock when again we hit the price that we want, and then we retain return the borrow shares to the broker, they flip it around, and it basically shows a great profitable trade. So short selling, we jump in on the play at the very top, falls on down to the bottom, we make money as the stock goes. We bring it back over to the broker, they reverse our entry and exit, boom, we make the difference. So it is allowed, it is legal, it is everything that we're doing is perfectly legit in the stock market. We are saying we are looking for a stock to fall because we do not believe that these plays are going to be holding up very well. So I talked about this a little bit yesterday, but why in the world would I ever want to short? Well, according to the US Bureau of Labor and Statistics, the BLS, data from the BLS shows approximately 20% of new businesses fail within the first 2 years, 45% fail within the first 5 years, 65% fail within the 10 years, and only 25% actually make it within, again, 15 years. So the thing is, we know about 80% of new businesses are going to fail over time. And as I already told you guys, it does not matter what play you look at. Let's bring up CTNT. If we are referring to penny stocks, I go over to CTNT, let's just switch over to a weekly chart. Every single play is going to be probably fading and falling over time. CTNT was at $6 and faded and fallen, was all the way down towards, again, $1. Now it has a little bit of a pop at this moment, right? Let's take a look over on HOLO. HOLO was all the way up at $356. Now it's at $3. Let's take a look over on MAXN. MAXN was all the way up at $58. Now it's at $3. Let's take a look over on KOSS. KOSS was at $128. Now it's at $6. Let's take a look over on VUZI, was all the way up at $32. Now it's at $1. Let's take a look over on BIG. BIG was all the way up towards $71. Now it's at $4. Let's take a look over on TUP. TUP was all the way up to $66. Now it's at $2. Ladies and gentlemen, the stock market is just a huge marketplace of where companies are trying to get investors to give them money. That's all it is. The stock market is, let's put our business on here and hopefully people give us money. But guess what? For 99% of plays, they don't get money. You know who gets money? Apple, Tesla, Google, Microsoft. All these other plays just fade over time. All these other plays just fade and fall and get weaker. You have better odds making money on the downside than you do on the upside. We just looked at all these random plays. These are all just the top gainers on the day, and all of them are trash. All of them are falling over the last year, 2 years, 3 years. They just fade and fade and fade, which is why whenever we see a very nice spike, we know that that spike is not going to last. We know that that spike is not going to hold on up. Guess what happens, guys? It's so crazy. It's so wild. It's so nuts to me that every single day, we see a whole bunch of garbage plays and traders say, what's the best play? What's the best garbage play? What's the play that's going to spike? Guys, I can't wait to... Why are we obsessed? Why are we obsessed with trying to find what is going to be the number one top gainer that goes from $1 all the way up to $100? Why can't we just say, hey, this stock's at $100 and we know it's going to go back down towards $1? We are obsessed with trying to find the stock out of 1 out of 9,000 that's going to go on the upside, when we know nearly all of these plays are going to be going on the downside after these pops on it. These plays are going to fail. These plays are only up because of social media or, again, a press release that came out on that day, which is all hype related. I have shown you guys this picture a bajillion times that I will continue to show you. The reason how I've been able to make so much money in the stock market is just from basically realizing every play is built off hype. That's it. When you see these huge gains and you guys see these huge profits and you guys are saying, Deck, how in the world did you make 570,000? It's not me saying, okay, what's the best play out of 9,000 options and hopefully I nail that big time spike. No, it's waiting for the spike to happen and saying this play isn't going to hold. Let me just bet against it, right? Let me just bet against the play that I know that's not going to hold its gains. Let me just bet against the play that I know is not going to do very well. Let me just bet against the play that's probably not going to be able to hold up very well. That's all I was doing. I'm betting against the one that probably is going to give all of its gains right on back, right? So that's the idea about these stocks, that these are just not going to be able to hold. So let's get back into this. Let's take a step back. We are trading the penny stock market. These are not reliable companies, and 80% will go bankrupt in less than 2 years. Penny stocks run from momentum, not from financials. No one comes up to me and says, oh, Deck, are you shorting that play because it has a bad PE ratio? Are you shorting this play because it has, bad earnings reports? Guys, I'm shorting a play because it spikes up 200% on a day. The reason why, again, I get involved over on plays is because when I see a stock go straight up, most likely in the future, it's going to come straight on down. When I see a stock go straight on up, it's most likely going to be coming straight on down. When I see a stock go straight on up, most likely it's going to be coming straight on down. Take a look over on, again, GameStop, which is, the talk of the town right now, which everyone's looking at. You go straight up, guess what happens? You have a great opportunity of coming straight back on down. You go straight up, you have a great opportunity of coming straight back on down. Take a look at what GameStop is speaking to us. Let the chart tell us what we should do, right? Let the chart tell us. GameStop right here is in a weekly time frame, okay? So we are in a weekly time frame right now, GME, okay? Now, this W stands for every candle that we're looking at. Every candle is representing in the last 5 days of trading, from Monday to Friday. Now, if I take a look over on these, I can see on this huge candle, Monday through Friday, we spiked from here all the way up to here. But then the following week, we had a monster red candle after we formed this upper shadow. Then we also do have right here to right here, 5 days of climbing, we formed an upper shadow, then the following week, we gave it all back. Then you guys can see from here to here, gave it all back, here, here. You guys can see the idea of what's going on. If GameStop over this next, let's say, few days, pops back up towards, again, $52, pops on up to $50, pops on up to whatever dollars, next week should be an easy short for us, right back on down. Because that's what has happened how many times? That's what the chart shows us. A lot of people aren't willing to read the chart and actually understand the chart. If you told me that every single time GameStop had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Every time I had a massive rip, it crashed the next week. Guess what, the big short for myself is going to be? The big short for myself right here is going to be next week, I'm going to be able to make that money. Next week, I'm going to be able to make that cash. Next week, I'm going to be able to make that profit. Next week, I'm going to be able to make those gains, right? So I want to make sure every single trader understands when you look at these charts, these plays have a 9 out of 10 better chance of going down than they do of going up. But still, we're so obsessed with, oh, what's going to be the play that goes up? And that's what we have to get out of our heads. So you guys may have seen this picture before. Aerotime. Aerotime, what's this from? This is from, again, Wolf of Wall Street. Aerotime, what does he say? He says, Aerotime is groundbreaking pharmaceutical company coming out with huge expectations from blue chip companies. Are you with me right now? Right? It's like, this is what a lot of the penny stocks are. They are just 2 employees, 1 employee. It's where's your office? Oh, where office is at our house, right? They don't even have an office space, which is why every time we see spikes, we have to realize these spikes are not going to hold their gains. Now, if we know this, that every single time a stock spikes, it does not hold its gains, why don't we always win? Why don't we always realize that this goes straight on up and comes straight back on down? Why don't we always realize that this goes straight back on up and this comes straight back on down? Usually the issue is the lack of patience. I see UONE start spiking very big. I see UONE starts going crazy, and then guess what happens? We say, okay, time to jump in, and it keeps going higher and higher and higher. Something that I've been working on over the past year, as you guys know, I haven't been shorting over the past year, taking a little bit of a hiatus off of it, is that I've realized that if you wait 1 week after the initial big spike on a supernova play, you have, what I've realized so far, over a 90% chance of success. You wait 1 week over on these plays. This is in a daily chart. 1, 2, 3, 4. There's a big time spike. Over the next 5, 6, 7, 8, 20, 30, 50 days, it falls all the way back on down. Here's again SPI. Monster spike. Guess what? It gave all of its gains back on down. Monster spike. Guess what happens? It gives all of its gains back on down. So, you're already picking up on things. Number 1, these plays aren't holding. Number 2, they give back all their gains. Number 3, they all have big, long upper shadows. Can you start seeing the predictability right now, traders? Are you guys with me on saying, wow, this is getting so easy, it's almost insane? Are you guys realizing, okay, I don't even have to find the number 1 top gainer. The number 1 top gainer is just given to me every day. Deck, how do I know what the number 1 top gainer is? Well, first things first, we all know GameStop's the hottest play. Or second things second, I literally just gave you my scanners, and it's just going to tell you what the number 1 top gainer is every single day. So it's like, Deck, are you kidding me right now? Literally, all we got to do at this moment is wait for the number 1 top gainer. We know if it's a crazy supernova, if we short it the next week, we're going to make money. And in most of these cases, if it's just like a 200% spiker, they're most likely going to come crashing on down within the same day. Yes, yes, yes. I'm literally giving you the answers. I'm giving you CTNT, most likely going to come crashing back on down. GameStop, best time to be able to short this one is going to be next week, as it is a bigger supernova. This play is going to come crashing. Why? Upper shadows, weekly chart, everything I'm going over. Let's stop trying to pick the 1 out of 9,000 to be the winner, and literally the answer will be given to us, right? We have it. We have it all set. Traders, you guys have seen my P&Ls. Over $500,000 in a year. I'm giving you everything you need here. So are these penny stocks really going to hold their moves? No. Someone find me 1 penny stock. Find me 1 penny stock that has ever spiked and kept going higher and 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 just kept going up forever. You see, you can't find one. I knew it, right? So, hey, sorry, I'm getting a little carried away. Is there a play that maybe started as a penny stock and started building on up and building on up and became better and better and better? Sure. I could say Bitcoin, right? Bitcoin. But I'm not talking about Bitcoin or cryptocurrency, right? I'm talking about 99% of penny stocks. When they spike 200, 300%, give it a week for the hype to die on off. And guess what? People start losing interest. They do. Now, GameStop, AMC, maybe a little different. You know why? Because they do have that big follow, right? So I'll give that. That's a little bit different. But 99% of penny stock plays, people just can't keep their interest, because the moment it goes up, they love it. They love it. They love it. They turn it for a second. And then guess what happens? Everyone loses interest on it. And they say, okay, where's the next one? Where's the next one? It's basically like we're taking advantage of the fact that there's social media today. We're taking advantage of the fact that there's so much hype in today's world. We're taking advantage that people can't stay focused on a play for more than a day. Guess what people do all day long, every single day? I'll show you right now. They go over to TikTok and they do this. They go over to TikTok and they say, oh, wow. Okay. Oh, wow. Okay. Oh, wow. Okay. 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 It's like we can't watch anything for more than 10 seconds, it seems like, right? Every 10 seconds we scroll to a new video. Every 10 seconds. Like basically the younger mind is programmed to have such a short attention span. We're basically taking advantage of this attention span on the fact that people are not going to stick with the majority of stocks. These plays are going to come crashing crashing back on down extremely fast. These plays are going to come crashing on down the moment that people start losing interest on. And that's what's so amazing. So let me ask you guys this question right now. Are you a trader, right? Are you this type of trader right here? Are you a trader that constantly buys in at the top? You see a big time spike, you buy in at the very top, you end up losing. Every time you buy into a play, it reverses on you. Every single time you get involved on these plays, they start getting weaker on you. It seems like no matter what you do, you just can't get it right. So why not turn that weakness into strength? Why is it every single time you buy, you lose? Well, how about every time you buy, you win now? Just bet the opposite way, that it's going to fall. Stop chasing and start shorting the highs. New traders rely too much on visual confirmation. I've talked about this before, but this is the number one sign of a weak-minded trader. Guys, I'm sorry, I don't mean to call you out in any sort of way if this is you, but I'm going to say you're a weak-minded trader. And the reason why I'm saying that right now is because I want you to be able to stand up and say, okay, you're right, you got me. If I saw a play, and I see this happen way too often, I see a stock, let's say ABC, whatever, stock ABC comes out with positive phase 2 news. Positive phase 2 news that has reached endpoints. Something that's really good, right? That's a very good press release. You see this press release and you say, okay, that's a good press release, but I'm a little scared to jump on it. It may not move. And then it goes up higher. And you say, oh man, it's going on up, but now I don't want to chase because I know chasing's wrong. So it goes up even higher. And you say, oh, okay, hold on. I might get in. And it goes up even higher. And you say, man, this is going crazy. Okay, I'm buying in. And you buy in right here. And then it starts turning and dumping and falling. How many times has that happened? Guys, if that's the type of trader we are, let's just reverse that. Turn our weakness into strengths. Be the person that says, hey, if I'm late to the play, that's okay. If you're late to the play, that's even better because now you can get involved in shorts, right? So we want to make sure that we are understanding this, okay? Now, shorting is the same exact way as buying shares, traders. When we short 1,000 shares and it moves $1, right? We still make $1,000. If a stock goes up $1 and we have 1,000 shares, we still make $1. So no matter what, depending on your share size, I always go with like 1,000 shares, 2,000 shares, 3,000 shares. 1,000 shares, $1 up is $1,000. 2,000 shares, $1 up is $2,000. 3,000 shares, $1 up is $3,000. Same exact thing on the way on down, right? There's no difference between buying or shorting. You're making the same amount of money. So let me ask you guys a question right now. If I showed you already that the majority of plays are going to fail just in time, they're already going to go on down. And we already know that the majority of penny stock plays that are based off hype and momentum are just pumps that are going to be dumping on down. And that these plays are nearly every single time, if you give them 1 week, they're going to come crashing on down. And we have never even found a penny stock that's ever gone from a penny stock and actually turned into a good, credible company. And we know that all these plays, all these traders have short attention spans and can't keep their attention on a play for more than like a day or two. It's almost like, why are we doing options again? Traders, let's think about this now. We already talked about all the reasons why we don't like options. We already talked about all the reasons why the odds are against us. We got to pick the right stock. We have to pick the right price. We have to pick if it's going up or down, right? We have to pick if it's going up or down. We have to not only pick though the strike price. Is it going up or down to this certain price? We have to talk about again the expiration date, up or down on the correct price to again this correct price before the expiration date happens. Then on top of that, we have to do it before again time decay takes on over. Then on top of that, guys, we have to be able to face all the other Greeks that we have and again implied volatility. We have every reason why we are going to be a loser on a lot of our plays with options. Now on top of that, let's imagine if we're doing options on again smaller to mid-cap plays. Mid-cap plays, the ones that I already told you that are probably more likely to fail over time, and the ones that are most likely going to be pumps, and the ones that are more likely going to have that short attention span. And if you're not in right away, you're most likely going to end up losing. So you have all these reasons why you can lose in options, plus again all these reasons on the upside for again penny stocks. Really, it's just like you have every reason why you will lose. While on the opposite side, we're saying to ourselves, we have all these reasons on why we can win, right? We short, right? When we short, we don't have to pick, we don't have to face any of this. When we short, we don't got to face implied volatility or Greeks or time decay or expiration date or strike price. All we got to do is pick the right price that we think is going to go down. And on top of that, we don't have to face any of this. We don't got to face again, oh, is it going to last? Is it going to have attention? This company's not a good, healthy company. We don't need to focus on that in any sort of way. All we need to focus on is that this play is most likely going to go down over time. And guess what? You now are going to be a winner. All right. So happy trading, everyone. So pros, it is easier to find a stock later than it is earlier, right? Isn't it easier to find a stock later after it's already spiked on up than it is earlier? Nearly all spikes will crash as penny stocks are momentum based. It's extremely profitable if you can learn the tops. Cons, numbers go forever. Do not hold shorts overnight. Now I've talked to you guys about this already, okay? But they have changed this, but I would always double check with your broker. But this is the number one issue that people always get scared of. The number one issue people always get scared of with shorts is that, as we talked about, if we have a stock that's $5 and I buy 1,000 shares, right? Buy 1,000 shares. The most money that I can lose is it goes to zero and I lose $5,000. If they're shorts though, and I short 5,000 shares and it goes up to $10, right? I lose $5,000 bucks. But what happens if it goes up to $20, right? Am I going to be down $10,000 in debt? Well, brokers won't allow this anymore for the the most case. People get nervous that, oh, what if I hold a play and it keeps going higher and higher and higher? Do I go into debt? Now, Lightspeed gets you out of your play. If you lose more than 90% of your account on a trade, on any trade that's up or down, they liquidate your account. And what does that mean? They basically say, hey, you know what? We're getting you out of this play, right? We're going to liquidate your account. We're going to get you out of this play because we don't trust you. So that's great that, your broker should be able to do that for you and that you'll be all set, ready to go. So you really don't have to worry about that. But there was a time that people were getting very scared, which was understandable. For instance, this was a story. I don't mean to scare you because you guys don't have to worry about this, but this is what used to happen. You could see this was back in 2015. And I actually remember trading this play. I was at this time, guys, a junior in college, and I remember the same exact play. It says, help, my short position got crushed, and now I owe E-Trade $106,000. So his name is Joe Campbell. He claims he went to bed Wednesday evening with $37,000 in his trading account. Then again, later woke up and he was in debt of $106,000. What happened was the stock came out with news overnight. It went on a big time spike and he woke up and was in debt. So do you guys need to worry about that? As I said, no, your broker's going to liquidate your account, but please understand there is still a lot of risk with shorting overnight in case the stock ever has a gap on up, but it really is the same amount of risk on the same exact thing if you guys were ever buying a stock and it has a big gap on down. You can lose money on both sides. Both sides, you can lose money on the upside. Both money, you can lose money on the downside as well. Okay. So I wanted to make sure that you guys understand that and everything that we have going on at this time. Now, again, we are going to be moving into some different indicators that are going to help us on our shorts and talk about, how we can be able to figure out when stocks are going to be getting some sort of reversal. Let's talk about some indicators. Now, these indicators, this is not going to just be for, let's say, day trading and penny stocks. This is going to be a little bit more for blue chips, but it is going to be an indicator that I want you guys to start messing around with and see if you guys like it or not. Now, this is a very popular indicator. You might know this indicator very well, but there's going to be two that I'm going to be talking about today. And the two that I'm going to be talking about today are going to be the RSI and the MACD. And the RSI and MACD are going to be two great indicators to show us when we should start doing a short position, to show us when things are going to start getting a reversal. And there's going to be a secret though on how to do it with day trades. Okay. So first things first is let's understand what the MACD is. Let's understand what the RSI is. So first things first is we are going to take a look over on stockcharts.com, and stockcharts.com shows us that we have an RSI and the MACD. That's what I just put on. That's what I was just kind of loading up over on this chart. Now, a very simple way to be able to read this, very easy, is if I take this Tesla chart right here, I'm going to draw on it, and you will be able to see that anything that is over a 70 is considered overbought. Anything that is even near a 90 is going to be extremely overbought. Now, anything that is going to be near a 30 is oversold, and anything that is all the way down to a 10 is extremely oversold. So let's take a look at this chart. Now, this chart right here is Tesla. Now, what is so cool about this is whenever we are overbought or whenever we are near overbought, what do you guys think is going to happen in the near future? Well, let's think about it. If I came up to you as a broker and I said, hey guys, let's buy the most overbought stock we could do. Let's invest our hard-earned money on a stock that's extremely overbought. That's probably going to come crashing on down in the near future. Does that sound like a smart idea? Does that sound like a smart investment? The answer is no, not at all. That doesn't sound like a smart idea to me. So when I see that these plays are extremely overbought, what do you think is going to happen? Profit taking is going to happen. People are going to take gains. People are going to get out of it. It's going to naturally adjust, right? Just like a lot of times it's like nature. If we had a drought, if we had a lot of, dry, a lot of times nature fixes itself where we're going to have a lot of rain coming up in the future. Sometimes if we have a lot of rain, guess what happens? We have a lot of hot days in the future. Nature adjusts itself to be perfect. Same exact thing in the stock market. A lot of times, other than manipulation, things are going to adjust and be able to have that nice natural bounce. So if I see that a stock is extremely overbought, what do you think happens? Well, what happens is the stock comes crashing all the way back on down. And it comes all the way on down until guess what happens? We start becoming oversold. So now I'm oversold though. And if I told you, hey guys, let's short an oversold stock, would that be a good idea? The answer is no, not at all. It's not a good idea. So instead, guess what happens? Buyers now start moving in on these plays. And the buyers start saying, hey, it's oversold. It's a good opportunity to move on in. And then it starts moving on up. And then you guys can see right here, it's oversold. So it's a great area to start looking for an entry. And it's oversold. So it's a great entry, look for an entry. And it's oversold. Here's a great entry. Do you guys realize that every single time Tesla has become oversold, it has always been a perfect entry? This is Tesla's live chart. Let's take a look at a different one. Meta right here, team. Whenever, again, Meta is overbought, guess what happens? It comes crashing on down. So you guys can be able to see this, right? This is, again, Meta. This is the price of Meta over here. This is the RSI above. Whenever we are overbought, we come crashing on down, right? Whenever we are oversold, we start moving our way back on up. So you guys can place this over on your charts as well, over on trade ideas. Remember the charts that I just gave you. Go over to indicators right here. Go over to add. We are going to scroll on down to RSI. You want to leave it in the 14 period. That's important. That's the standard. That's what everyone has it. So then you go to add right here, and now we can see exactly where these smaller cap plays are considered overbought or oversold. So you guys realize something. Whenever it is overbought, such as has an 80 on the RSI or way above it, it's going to come crashing on down in the near future. Whenever we are above that 70, above an 80, guess what happens? It comes crashing all the way back on down. It's very nice to be able to see. Type in any play you want. Let's just type in GameStop here. Let's see what GameStop's looking like. Obviously, at this moment, guys, GameStop is extremely overbought. It has a 94 on the RSI. So yes, in the future, there is a great chance that this is most likely going to be coming crashing on down. But we can really look at any of these plays here today. It doesn't have to be that one. Let's take a look over on CTNT here, right? CTNT, it almost lines up perfect. Whenever we have a little bit of a spike, but we're above 80 on the RSI, in the next few days, we usually have that pullback. Now we have a 78 on the RSI. Guess what? In the next few days, we will be having that pullback. So it's great to just be able to have that RSI indicator to tell us really when we're overbought. Sometimes we may want to short a stock and we're not truly overbought yet, and this gives us patience to be able to wait for that overbought play. Same exact thing if we want to go ahead and look for a dip buy and we say, hey, we're not really oversold yet, let me have patience. So that is an absolutely beautiful thing for us to be able to realize and for us to be able to know. Now, what else do we want to be looking at? Well, we can also be looking over on the MACD. Now, the MACD is another indicator that's going to tell us when we are going to reverse. The MACD is going to be the bottom line here, okay? Now, the MACD, guys, I basically think about it as wrestlers, all right? It's basically wrestlers. If you want to think about it in a little more of a spicy way, you can think about it as lovers, all right? And you guys can see what you guys will see what I mean in a second. Basically, the MACD, we have our two lovers right here. We got our two wrestlers right here, which is going to be the black line and the red line, okay? And what do we have here on the black or red line? Well, the black line right here is going to be the bulls are in control, okay? The bulls are in control. And the red line right here is going to indicate that the bears are in control. So a lot of people like to either look at the RSI or they like to look at the MACD. You can look at both, but a lot of times people, again, like to pick one that they find a little bit more successful to them. All preference. So what happens when bulls are in control? When bulls are in control, we know that a stock usually goes up. And when bears are in control, guess what happens? A stock usually heads on down, right? So who's on top? Who's in control right here? Whoa. Who's in control at this moment, team? You guys can see the bulls are in control. Bulls are in control. Bulls are in control. Bulls are in control. As the bulls are in control, guess what happens? The stock goes up, 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 up. Then guess what happens? We roll around, we switch, and now the bears are in control, right? Now the bears are on top, and now bears are in control. Bears are in control. Bears are in control. And as long as that red line is on top, we know again we're going to keep on falling. But then we get that reversal, right? Then we get the switch. Now bulls are in control. Now again, bears are in control. Bulls are in control. So you can basically say to yourself at this moment, right? Whenever the bulls are in control, you always have a better chance of going up than going down. When the bears are in control, you always have a better chance of going down than going up, right? Pretty interesting to be able to see. Now, same exact thing, team. We can go over to indicators right here. We can scroll on over to the MACD, be able to add the MACD, click add right here, bada boom, and be able to have it. And you might need to extend your charts, adjust these a little bit, for you to be able to see them a little bit better, but you guys can be able to change this and check it on out. In this, it is going to be gold and blue. Now you can change the colors that you want, the gold and blue. But right here, team, who do you think's in control? The gold. Gold is the bulls, right? Gold is the bulls here. The blue on this case is the bears. Now, what is so great and what is so awesome? If I see that the MACD starts having the bears take control and I start seeing that the RSI is overbought, well, I got basically two perfect stars aligned right here showing me that we're going to dump soon. So I can see right now, the RSI tells me on GameStop, we're at a 94 on the RSI. We are a little overbought. But I also know the MACD tells me that bulls are still in control. So I think the smartest thing for me to do is actually wait for this to stay overbought, but wait until the bears can catch up to the bulls and start overtaking them. Wait until, again, the bears get on top and then again start bringing them on down. That's what I want to see out of this play. And that's going to give me timing. That's going to give me patience to wait for that. Guys, it's like I'm talking about these things right now. I'm getting excited. I'm getting excited at this moment. And it's like so nuts right here. I hope you guys are seeing what I'm seeing. I hope you guys are saying, man, there is so much predictability on when stocks are going to fall. It's almost crazy. Deck's showing us the RSI right here, showing us when it's overbought and when more people are going to start selling, showing us that when bears take on over, we have another opportunity that's going to sell. Remember, odds are going to be in our favor. On top of that right here, guys, we already know GameStop is up super big, but it usually holds for about a week. And after about a week is when this thing comes crashing back on down. We can see this every single week that we've had. Spike on up, crash on down, spike on up, crash on down, spike on up, crash on down. So we may want to wait until next week before we start doing our big time shorts on this play. But we also know again that this play is all built off on hype and momentum, and all these plays have a 99% chance of coming crashing on down. Deck, where have you been all my life? Where have you been all my life? All my life in my stock trading career, all I do is follow people on Twitter and say, hey, hopefully you can teach me how to buy the play that comes on up. Hey, does anyone know what stock's going up? Please help me. Please help me. Does anyone know what stock is going to go up? Is anybody there? Hello? Papa, What stock will go on up? Hello. Right? Hey, I'm going to pull you out of your little stock trading orphanage that you've been on. I'm going to feed you, give you some food right over here. Traders, GameStop, all of these plays, all of these ideas, you can get confirmation, right? You can make sure every single trader now is saying, all right, overbought, great, but a little too early to pull the trigger. Let's wait until we get those reversals, right? Now, you can also do the same exact thing over on the minute chart. But if you do a 1 minute, 2 minute, 3 minute chart, it's not going to be super accurate. What I want you guys to remember is the larger the time frame, the more accuracy you're going to have. Monthly time frame on the RSI will give us the most accurate idea of how overbought or how oversold we are. On a 1 minute time frame, it's not going to be that accurate. So if you are using the MACD or RSI and you are day trading, this is where it's important. Have at least a 5 minute time frame, okay? A 5 minute time frame so that you guys are getting some decent, accurate information as a day trade. You don't want to be doing a 1 minute chart. It's just too close. It's just too tight, okay? So that is very important that you guys are understanding here. So let's just take a step back here for a moment. Traders, out of today, we learned again what shorting was, why we short. We're again understanding predictability about shorts. We gave you guys my scanners. We gave you guys our indicators. We talked about our trade idea setups. We talked about our light speed setups. We talked about how to be able to place an order. We watched GameStop in the morning. Traders, I'm going to say right here, right now, this is a pretty successful day. This has been a pretty successful day. Now, I know a lot of people are now saying, all right, Dak, I'm starting to understand this. I'm starting to get an idea. What do you guys think is going to start coming out tomorrow? Tomorrow, guys, probably going to get our first short in, and we're also going to start talking about shorting strategies. So you guys think we're slowing down? Guys, we're like on the intro of the book of shorting. We haven't gone into shorting strategies yet. We haven't talked about live shorting trades yet. We haven't talked about news yet. We haven't talked about pre-market or after hours yet. We haven't talked about, again, candlesticks yet. Woo! You guys better buckle in. You guys better buckle up. I told you over this next 30 days, I'm giving you everything you need to be successful. And then again, you can go ahead and flap your wings and be able to be successful. That's what I want, guys. All right?